Shares of Deutsche Bank tumbling this morning in European trading. The bank hit by a sudden spike in the cost of its credit default swap, sparking renewed concern about the stability of European banks. Joining us now on the Squawk Newsline, Larry McDonald of the Bear Traps report. So, Larry, Credit Suisse. All right, so now we got that sort of resolved with UBS. But Credit Suisse actually had the gall to say that it was partly Silicon Valley Bank's contagion that caused that. Number one, was there any veracity to that? Could a regional bank, it was pretty big, but could a regional bank here cause that at Credit Suisse? And wouldn't that explain why people over now, other European banks are going to be tested? Because it looks like it probably wasn't SVB. It's something deeper than that. I don't know what it is. Maybe you do. But now some of these other European banks are going to get tested. Why?
Well, yeah, that's a bit of a stretch, but the Silicon Valley Bank problem brought more attention on banks. And so banks like Credit Suisse and Deutsche Bank that have been horribly, horribly managed for decades. I mean, we're talking about really poor management and horrible decisions. All of a sudden, investors around the planet focus on that. And then on top of that, the ECB raises rates and celebrates that raising of rates. And then the cost of capital for banks in Europe, the ECB doesn't understand. When they're raising rates this high after the AT1 scandal, banks can't fund themselves. You know what I mean? These banks need lower cost of funding.
Yeah, and the those were providing some of that, and they're not going to be able to go to that well anymore.
Aren't the other AT1s bonds different in other places? I mean, I know the ones in Switzerland. I thought they were very specific that they could be subjugated below equities. I thought the other ones, that wasn't the case. Am I wrong with that, Larry?
No, that's right. But what happens is there's such a shock, and you're absolutely right about that, because we run a conversation with institutional investors, and there was like a day period where people were mixing the two. But it's just like people, after they watch, preferreds get eviscerated below equities very fast. Everybody just like kind of goes, okay, I don't trust this. And then all of a sudden bank funding across the entire AT1 ecosystem, which is essentially like a junior subordinated preferred stock, all of a sudden that funding kind of evaporates, and then the cost of capital for banks to fund themselves changes dramatically and alters, and then all the eyeballs come on. Okay, who's the next victim? Who's the next Lehman after Bear? And the serpent in the market, that beast in the market wants to find that next victim.
So what you're saying sort of is, all right, so Silicon Valley Bank brought the attentions back to banks in the financial sector. So all of a sudden we're going to look under the hood at all these different banks. But the problems under the hood were already there. It's not Silicon Valley Bank's problem. So we knew this renewed interest in what's going on at Credit Suisse or Deutsche Bank. So is that going to spread across the continent? There's going to be, how does this end, Larry? Is it going to be stemmed in some way? What would you do if you were regulators over in Europe at this point?
Well, remember, the regulators, I wrote The Colossal Failure of Common Sense about Lehman Brothers, and the two regulators had an office, including the New York Fed, inside of Lehman, and the regulators had an office inside of Credit Suisse. So, unfortunately, regulation is difficult when you have people that make $10, $20 million a year at a bank and a regulator making a couple $100,000. It just doesn't work. It's never worked, right?
Larry, what could regulators and authorities do this weekend to stem some of this crisis of confidence?
Well, they're going to have to open the door to a softer path. So, the ECB, what they did, I mean, Trichet, remember in 2011, celebrated that rate hike. And a month later, Europe was in flames, right? And so Trichet was the ECB president. And the same thing just happened. The ECB did 50 bips. They're trying to put out the inflation fight. God bless them, right? God, they have horrible inflation in Europe. I really sympathize with their position. But you're hiking rates to put out an inflation fire, and you're increasing the cost of capital, making banks function in a very poor way. So they're going to have to just at least acknowledge the fact that the hiking cycle's over and that rate cuts are around the corner, and that'll put up the fire for now.